Everyone probably noted earlier in this week, the Federal Reserve dropped interest rates 25 basis points. Interest rates represent the price of money. The price of money feeds into the financial models that venture capitalists use when they start to value your business. The price of money is also called the risk-free rate. The risk-free rate is the rate at which if you just put some money in a money market account, you're gonna get that 4.5%. So when the Fed cut rates the other day, they lowered by 25 basis points the amount of interest you're gonna get on money just sitting in your money market. If I'm an investor and a venture capitalist comes to me and says, give me $5 million to invest in my VC fund, the venture capitalist now, before this Fed meeting, they wanna know, is my investment in your venture fund gonna generate more than 4.5%, which is the risk-free rate. Now, when you drop the federal funds rate from 4.5 to 4.25, you have now lowered that risk-free rate. That means that if I had tens of millions of dollars in a money market, instead of getting 4.5% interest on that tens of millions, now I only get 4.25. And when you hear in the news folks saying we want to drop these rates back down to zero and all that sort of stuff, zero bound, etc., what that is doing is it's forcing those investors who can just collect those coupon payments, it's forcing them off the sidelines because they can no longer get that 4.5%. Just think about a big number, 4.5% on $100 million, 4.25% on $100 million, 3.5% on $100 million, 2.5%. Each time these rates start jumping down, especially when they drop drastically, that spurs investors to answer the phone when a VC makes the call. That means that the VC has an easier time raising money. That means he has more money to make investments. Now, you as a founder, that means you may now have more bites at the apple, because even if you're a seed stage business, the opportunity set of having cash sit in the bank falls with interest rates. That's why risk and speculation rises accordingly. That's why you saw during the 2020 to 2022 era, GameStop doing what it was doing. You saw various crypto assets doing what they were doing. The real genesis of it is that as these rates drop, money has to get put to work because money never sleeps. There's another concept of real inflation versus actual inflation. So like negative real rates. If the government is telling you that the inflation rate is only 3%, you and I know that's probably not true. If the interest rate is 4.25% and the inflation rate stated is 3%, that's 4.25 minus 3. But if real inflation is 5% and the interest rate is 4.25 minus 5 becomes a negative number. That's the concept of negative real interest rates. That's a bigger topic, but why do I highlight this here specifically for you? These topics impact the ability of capital allocators to both raise capital and your ability as a founder to get access to said capital. And so when you see things like, or hear things like the Fed's on a rate cutting cycle, that is a signal to business owners, to capital allocators, to entrepreneurs to get ready for the access to capital that is coming.